David, welcome back. How are you?
Doing fantastic, John. How about yourself?
I'm doing pretty well. Not bad for a Monday. We'll see what the Fed does this week in regards to rates. We'll get into that. But talk to us about the jobs report that came out recently.
You know, it's pretty amazing right now where we find ourselves in history. We've just had such significant revisions to the jobs numbers that we should definitely believe that these things should be discredited. I mean, when you miss it so significantly, you have to be a little bit critical of it. So, you know, we do saw jobs revisions come down 818,000, but guess what? We saw literally 1.8 million layoffs. Mm-hmm. We saw 500,000 jobs that were open last month go closed. And so there's a lot of employers right now that are buckling down. They're recognizing that cash is getting tight. And if you're talking to people just like I am, you recognize that is for sure true across the board with businesses, almost in any sector right now.
Yeah, there's very few that I talk to that you can just tell from the consumer confidence end of things that people are sort of a wait and see right now, David. That's my feeling. They're waiting to see what's going to happen with this upcoming election, who ends up winning, what's the economy going to do, what's the Fed going to do. In the meantime, I mean, to me, there's just all sorts of variables that I think the average consumer is still waiting for and looking at.
Absolutely. Yeah. And, the consumer right now, spending is way down. Everyone's got, financing of this inflation cycle, Bidenflation on their credit cards, and then now buy now, pay later. This is just spiraling out of control. And here's the part that I don't know that we've really put into our perspective. When we're looking at 20+% on credit card interest rates, and you're talking about young people,
30 for some people,
have super amazing credit already. How in the world are they going to be able to pay this off and get out of it? I literally had a conversation with somebody that was like, hey, I can pay my minimum amount and I would like to put an extra 1,000 on, but I can really only do about 750, 500. Right. And my interest is about 1,000. And it's like, how do you get out of that hole?
My feeling on it, David, is, things have to change. There's no way they're going to dig out of that hole. You know as well as I, there's only going to be several ways that happens. They either buckle down, dig themselves out and start paying a lot more principal than interest. The Fed does some things, which we'll get into when it comes to the interest rates themselves, where credit card companies lower the rate, which then helps people apply more to principal than the interest side of the fence. Or there's some sort of depending upon who wins the election, there's some sort of a big stimulus package like student loans to help people get out of their credit card debt. I guess there would be a fourth way. It's called bankruptcy.
Well, bring on the liquidity.
And by the way, the last two still cost us money as taxpayers.
Exactly. And basically, I think that the answer is that they're going to go with the most politically favorable answer, and that's going to be, hey, we'll just print, because no one seems to bother to care or have a loud enough voice to say that this is not something that we're interested in continuing to do. But really quick, let me. I think it's a combination. You can get your thoughts on this. I think there's a combination. I don't disagree with you. Yes, I do. There's going to be printing. By the way, there's going to be printing no matter who's president. Sorry for everybody that loves the conservative side, and I do, and I'm for Trump, and I'll vote the R just the way it is. So I'm going to go that direction. But don't be surprised if the printing press doesn't still run under Donald Trump, because it most likely will. So that one's going to happen no matter what. I also can see Fed, was reading this morning in some of the different journals and things that are out there. There's some folks out there right now that are betting on a 0.5 point change this coming Wednesday. What are your thoughts? I don't think that they're going to do a half. I think that we actually have a lot more challenges than the Fed's letting on, than anyone's letting on. And so the one thing that Powell does not want to do, and you have to understand that this is really a political cut, in my opinion, because the jobs data hasn't gotten terrible, because there's so many people out there today that won't say the things I just said about jobs. All right. So
What's Powell going to do? He has to stay higher for longer. He told us that in the beginning. I think he's going to disappoint the market that wants 50 basis points. I'm not saying 50 basis points wouldn't be awesome, but here's what ends up happening when Powell cuts. We get more inflation. What do you mean, David? Well, more inflation because what ends up happening is interest-sensitive assets like real estate, which are already at all-time highs at this moment, are going to go through the roof. If interest rates could somehow come down to 5.5% or 5% over the next 12 months, I think you'll see a ton of people rush in. You'll see some people come out, but mostly it's going to just be, new builders that are just going to be cranking right there. So asset prices go through the roof. But the other thing that this does when we start cutting rates is it actually makes the U.S. dollar weaker.
Yeah.
See, when Powell was strengthening the dollar because he was saying, hey, we're going to be stronger and tougher. Okay, well, here's the thing. If the U.S. dollar gets weaker, it takes more U.S. dollars to buy the things that we need. And so how does that work? That's more inflation. And then this also makes the Japanese carry trade way worse, which that was the reason why in early August we had this big volatility spike and the market was like, what am I going to do? And so I think that Powell's going to be slow, and he's going to do a lot less than people think, because I could actually talk out of the other side of my mouth and say he really should be hiking right now. Although I don't think that's the right answer. I think we've approached this wrong. He doesn't want to lose his credibility, and he cares tremendously about his credibility long term.
Yeah, and I don't know that I can disagree with any of that, although I don't think, you already know he can't raise. In my feeling on the raising is, to your point earlier, there's already enough people struggling. They're having a hard time, paying bills, paying those credit cards. The interest rate for some people is in the 30s, not 20s, by the way. It's really high for a lot of individuals. And the only reprieve, I hate to say this, but outside of the things we mentioned a moment ago, the only reprieve they get is if somehow interest rates come down. Otherwise, they're going to keep paying interest. They'll never stop, David. Some of these people will never stop. They'll be paying that forever.
Yeah, no, correct. And by the way, the consumer, if they think that it's going to be forever, ultimately they get to the last stage of the down cycle, and that's what's called capitulation. And so in capitulation, they just stop. They care. They say, screw it. I'm not going to be able to pay it off, so I'm just going to file the bankruptcy. I'm going to do whatever, and they're going to bail me out. And especially if Kamala gets in, that's going to be the attitude. But here's the point. Unsecured debt like a credit card, you don't repo a house with this. You don't repo a car with this. That was someone's groceries or gasoline.
That's right. There's no repos. You're correct on that. Absolutely.
And so this is unsecured debt. What are we going to do in the United States when our banking industry is loaded with debt and our consumer cannot pay it? And that's 70% of our GDP is the consumer spending money. And so,
well, that's where and by the way, this is where I come back and say, I don't think Powell has any choice.
Yeah, no, he doesn't at this point. But here's the thing. You need to remember this.
Go ahead.
If he cuts and then he has to raise again because everything goes so inflationary through the roof.
See, and I'm not totally sold on that, because I also know as an owner, small business owner, that when owners and businesses, small, medium, and it doesn't affect the big guys, but the medium to small businesses that have lines of credits and so on, that's inflationary as well. So when the rate's high and they're passing those costs, because let's face it, owners don't eat everything. Corporations don't eat costs. They pass them on to their consumers. So if you can get their spending, their interest costs, the cost for them to do business and grow and do those things, it also creates inflation. So I get it. It's a two-sided coin, and I'm glad I'm not the Fed chair, although I think there's times I could do a better job than some of the guys we've got there now, because I can read Main Street better than these guys can. They read Wall Street. I read Main Street. I don't know. I'm torn, because I understand everything you say when it comes to the rates and where we should actually be. But I also know that businesses that are paying a higher rate to do business on a daily basis, given the climate that we're in right now, and these are folks that are trying to keep people employed and, keep goods on the shelf, if you would, and do all these different things, they've got a money carrying cost. And if it's higher, that's inflationary as well.
Absolutely. And in fact, what happens here is that we risk losing some very important businesses and pieces of our economy if we don't actually cut. Because basically Powell, the issue here is that he raised so quickly.
That's right.
He was 18 months late to the party, so he was not credible there. Everything was a transitory. And then, hey, we're only going to go, little increments up, nothing bigger than 50 basis points. We did 5 consecutive 0.75s.
That's right.
Okay, so he's been wrong every step.
That's right.
And then he says, hey, we're going to cut, we're going to cut, we're going to cut, we're going to cut.
Then he doesn't.
Cut. We're 18 months later now. And 14 months later now.
That's right.
In the July 20.
Everything. By the way, everything. Like I said, could I do a better job than Jerome Powell? Honestly, this last go around, I was calling for rate increases on this program long before the Fed did, because you knew what inflation was already starting to do. They should have, if they would have raised sooner, they wouldn't have to go as high. Let's just say it that way.
Absolutely. And in fact, the repercussions won't be as bad when you have to figure out, really what is ultimately the plan here going forward. But, gold tells you that inflation's real. Gold's sitting here at an all-time high today. And guess what? It takes more U.S. dollars to buy 1 ounce of gold. Therefore, that is inflationary.
True.
And so you can say it's going down, but guess what? Gold's telling us a very different story right now. And I don't know if we're all paying attention.
Well, and as you know as well as anybody out there, that even if inflation drops, that doesn't mean prices came down. It means the rate of inflation dropped, but overall prices are still up 25 to 30 points from where they were 4 years ago.
Absolutely. And so, when the American people go to the ballot here in November, I'm hopeful that they're intelligent enough to get beyond headline statements like this debate that happened last week in front of no audience, and it was completely biased, and ABC should be literally ashamed of themselves and how they conducted themselves in this way, fact-checking Trump for little minor comments, and she makes claims like, hey, there's not even troops in a combat zone.
That's right.
In a century.
That's right.
What an unbelievable lie. If people are falling for this stuff, that is shame on us. But the point is, I think a lot of people recognize, to your point, the price of everything is a whole lot more. And even though they're hearing one thing, they're seeing another. The emperor's got no clothes on right now, and it's unfortunately going to cost the middle class the most, in my opinion, because the taxpayer ends up picking up the bag when we QE and we just print and spend.
Yep, absolutely. Where do folks find you, David, and when's your book coming out?
myspg.com is our website. The book is going to be coming out, John. I'm thinking it's going to be here about October, halfway through.
Okay.
The challenges are that I have a life that is quite complex right now, given all the crazy things that are going on.
You wear a lot of hats
here.
like I do. Let's just say that.
Yes, sir. But we're going to get that book out, and it's going to be an awesome one. But Riding Bulls and Taming Bears is going to help people make better decisions about these investment choices. So I got classes that are coming up. We're actually going to be doing a number of these, offering them for the first time online. And so if people are interested in checking that out, they can go to our website and look into events and different information out there.
David, I always appreciate having you. We think very much alike, and I appreciate all that you do, even outside of the financial world. So thank you so much. Keep up the great work, and we'll have you back again.
Hey, appreciate it, John.
You betcha, David. You take care. And up next, High Five Plumbing. Yes, water filtration.